So based on popular demand, people always ask me, hey, Wale, we know you're a rental property investor. If you have $50,000, just like me, what are you going to do with it? And how will you use that money to invest in real estate? Today, that's exactly what this video is all about. I am walking you through the step-by-step, what I would do if I have $50,000 to my name and I'm so new to rental property investing. I show you the real number, the real result of people that have done it, and no fluff of how you can actually do the same thing again, step-by-step, if you're ready to take action today. So why $50,000, you may ask, right? Why 50,000? Why not 10,000? Why not 100,000? Why not $1 million, right? Why are we choosing $50,000? According to Smart Asset, with $50,000 to your name, you can actually put down 15% down payment on a typical $250,000 house that will cover both your down payment and your closing costs. Smart Asset also explain what house hacking is, which means you can buy a duplex or for $500,000. You only put down about 8% down payment. If you choose to, you can do 3.5% down. You can even put 5% down conventional. You can do 0% down. But let's say you put 8% down payment, you can move into one unit, you rent out the other unit to a rental, and now you are a landlord and you're also a real estate investor. Maybe you're also almost living rent free because you're living in one of the units. Or at the very least, you're going to be reducing your living expenses by paying maybe almost half of what you're currently paying right now in terms of your rent. So what I would do with this is, with my $50,000, is first of all, I would choose my strategy. In this one, I actually have 5 options. With $50,000, I can use it in the 5 smart ways to build a rental portfolio, and you can pick one that fits your situation. But if I'm in your shoe, here are some of the options I would definitely explore. Number 1, I can buy a traditional rental property. I would target a price point of around $250,000 to $300,000. I will put 15 to 20% down payment, and I will make sure that the rent is actually between $2,000 to around $2,300, which is great for steady cash flow and minimal renovation. I probably will be buying a new construction because I want to be a turnkey investor, hands-off investor as much as possible, and I don't want to be dealing with several maintenance requests from tenants. Because the truth is that if you buy a older property, you're going to be receiving a lot of phone calls on repairs that need to be done, that your tenant will keep calling you, and I'm sure you don't want that. The number 2 strategy I will employ is to do house hack with a duplex or maybe a fourplex if I can qualify. I will buy a 2 unit, I will live on one side, I will rent out the other side. The rent that I'm collecting from the other side most of the time will cover 80 to 90% of my monthly mortgage payment, which means that I may only have to be putting in about $300 to $500 every month to meet up my mortgage obligation. Now I will be living rent-free because I'm occupying the second side of the unit. I will also be learning about real estate investing. I will also be learning about landlording. And above all, I'll be able to make a clear decision if I want to do this long-term or rental property investing is not just for me. So your first purchase is actually to test the water if this is for you long-term, or you should look for another path to build wealth. Now, I'll be able to put this 3 to 5% down because I will be using a owner-occupied loan that allows 0 to 5% down payment if I'm buying it as a primary resident. Above all, I'll be building wealth faster than my mates if I'm starting with house hacking. Now, once I'm done with house hacking, I will move to a little bit of more advanced strategy, which is what I call the BRRRR method, the BRRRR, BRRRR strategy. Now, this is my number 3 strategy I would definitely deploy. As you can see, I start with maybe a typical rental property, then I move to house hacking. From house hacking, I move to BRRRR. BRRRR simply means you buy, you rehab the property, you rent it out to a solid or qualified tenant, and you refinance. You know, if you, of course, you're probably borrowing some private money or hard money, and I will repeat the process again. This is one of the fastest way for you to grow your portfolio, and I've done it for me, for myself, and I've done it for people as well. Now, this is not for rookie. This is not a beginner step because you can easily lose your money doing the BRRRR strategy without proper guidance or without proper education, and more importantly, without having the right person by your side to walk you through the process, because there's a lot of videos out there you can watch that just give you the surface level. They don't dig deep enough to tell you what you should be aware of about BRRRR strategy. Now, let's say I have a little bit of knowledge or guidance, and I am comfortable starting with a BRRRR strategy. Maybe I want to skip the 1 and 2 above I just mentioned. I can just use my, let's say, $40,000 for down payment, and I use my $10,000 to do a light rehab. And of course, once I'm done, I put a tenant in the property, then I refinance it, then I try to do it again. Now, again, this is not really, I would not really recommend this for a newbie that has not bought any property before. But if you have probably owned 1 or 2 property in the past, you might start with this BRRRR strategy because that will definitely help you grow faster, especially if you are not afraid of fixing things in the house, or if you are not afraid of dealing with contractors or dealing with handymen. Now, this is also good for recycling the same capital and scaling your portfolio faster. Now, once I'm able to successfully do 1 or 2 BRRRR deal, I will now go to the strategy number 4. Again, this is based on what I would do if I'm just starting with $50,000 to my name with little to no knowledge in real estate investing. I will move to strategy number 4, which is to partner on a multifamily deal or do a joint venture with somebody. This is very simple. I only have $50,000 to my name, and let's say I want to buy a 10-unit apartment. My $50,000 cannot buy that 10-unit, obviously, right? So what I can do is to look for, 3 to 4 solid people that have money, and of course they know me, they like me, and they trust me, and I will pitch them my deal. Like, hey, John, I'm looking to buy this 10-unit. I need total of $250,000. Let's say it's selling for $1 million for 10 units, which means about $100,000 per door, right? Now, you need 25% down payment, which means I need $250,000. From that $250,000, I already have $50,000. That means I'm looking for $200,000, right? That $200,000, I can look for 4 people, and each of them bring $50,000 as well to the table. Now, I'm going to be giving them a return on their money. If that's how I want to structure it, I can promise them, interest-only payment. They don't have any equity in the property. Or if they really want equity, we can always structure something out. So this is, again, not for beginner, not for really somebody that has not done anything. And as you see, I will not start with this strategy. I will have done 1 or 2 or 3 deals successfully with a track record first before I get to this strategy number 4. So I will give the investors, those 4 investors, I will give them return. Typically 8 to 10% is very, very reasonable because they are not doing anything. They're just serving as a private money lender, and I will find a way to pay them off the property. So I can buy that 10 units. Maybe after 1 or 2 years, I should have made enough cash flow and appreciation to pay off those 4 investors. Now I own that 10 units to my name. Of course, I will still have the debts of maybe, let's say, $750,000 on that property, because out of the $1 million, I'm only putting down $250,000. $50,000 came from me, and the remaining $200,000 came from the 4 other investors, which I will pay them off within 1 to 2 years. Again, this is not for beginners. Please don't do this as your first deal. Actually, if you're a first timer and you are pitching this deal to me, I probably will not even listen to you because you have not done it. You don't have any experience, and it can just be it will be very clear to me that you're about to risk and lose my money, so I probably will not borrow you that money. So this is not for beginner. This is after you've done 2 or 3 deals and you are comfortable using other people's money to do deal, and you know that you will not lose their money. That is when you should be going after to talk to people about you using their money to do deals and pay them back. Now, if they want to return on, if they want to share equity with you, both of you have to come to agreement into what is reasonable and what is not. But typically, you will be the one doing all the work. This is very similar to syndication, but this is not really syndication because syndication has a lot more complexity, and I don't even want to get into syndication as your 4th deal because you're still really new and you don't know what you don't know. Now, the number 5 strategy I may also implement is to buy a turnkey new construction rental property in a fast-growing neighborhood, especially if I'm getting a good deal directly from the builder. I will use my $50,000 to buy a new construction in an area like your KD, Cypress, Richmond, or even your Pearland area. I will buy it as a new construction, which means 0 repairs to me. I will automate the system for me to collect rent, and tenants can submit their maintenance requests without any hassle. And as much as possible, I will be hands-off investor because I don't want to deal with tenant issue. And this might be you as well. Maybe you are a successful medical doctor, you are a successful attorney, you make good money as a business person, as an entrepreneur, and you just don't want to be dealing with the tenant crowd. This is one of the ways you can start by simply using your $50,000 as a down payment, because $50,000 can be a down payment of, let's say, a $200,000 or $220,000 property with your closing costs and your down payment. $50,000 is definitely enough for you to buy that property. So these are my 5 steps I will follow, or 5 strategies I will follow if I'm starting with only $50,000 to my name with little to no experience in real estate investing. As you can see, I will start with the easy one. No much moving parts. Very easy, very clear for anybody to understand before I start messing with the advanced strategy. The most advanced strategy I discuss is where you actually borrow other people's money. So please do not start this as your first one, which is my strategy number 4 I discuss here. So here is the bottom line. No matter your level of experience, this 5 strategy can actually help you start, but you have to start small and scale wisely. Above all, do not use other people's money if you don't know what you are doing, because if you do so, you will lose your reputation, you will ruin friendship, and you will regret your action. So if you are considering to implement this strategy that can actually help you, Houston is a great market with many homes between $150,000 to $300,000, and you can easily cash flow easily here in Houston, Texas. As a matter of fact, I'm still seeing the 1% rule due in the Houston, Texas area, and they are also cash flowing like crazy, and most of them are actually even new construction. So if you're in California, New York, Maryland, DMV, expensive markets, you definitely want to reach out to me because I can help you put down your $50,000 to work, and you can also reap all the benefits of real estate investing by starting with only $50,000. Now, builders like your Centex, your Lennar Homes, your DR Alton, your Pulte Homes have a median home prices between $300,000 to $350,000, which is still very, very affordable. And this property can easily rent for around $2,500, $2,600, which means that you're going to get to that 1% rule, which is your purchase price divided by your rent amount should give you 1% and above. Now, you want to make sure that you crunch the number. So if you don't know how to analyze rental property, don't buy it. You need to go get education first, and I do provide that for you. If you comment the word calc, I can actually send you my rental analysis calculator that can help you analyze a rental property investing as little as 5 minutes. So let's quickly crunch this number together. Let's look at this one. Let's say you bought a single family home in Katy, Texas for $300,000 and you put down $50,000, which is around 17%. You can buy a property for 15%. That's very possible. So let's say you bought that 300K property for 17% down payment, which is your 50K, right? Now your PITI, your monthly mortgage payment, which comprises of your PITI, which is your principal, interest, taxes, and insurance, plus your HOA is around $1,800, and the property is renting for $2,000. Now you can net about $200 in your pocket every single month. This is after all expenses, after all the whatever you're paying for. By the way, tenant is responsible for paying all the utilities, so you don't worry about that. The only thing you pay for is your HOA and your annual property taxes, and of course your landlord insurance if this is a rental property. Now the beauty of this is that as rent actually go up, your equity grow as well, and your cash flow will increase over time. So your year 1 might be $200 cash flow by starting with $50,000, right? In year 2, rent should go up. Maybe your rent has now grown from $2,000 to $2,100. Now your cash flow goes to $300. Year 4, another $100. Year 5, another, that's how you kind of grow. So your cash flow doesn't stay the same. It will grow over time. So is your appreciation on the property also grow. You can find the link to my calendar in the description below. I'll be happy to dissect your situation and see how I can get you started in real estate. Or maybe you've been trapped in analysis paralysis, watching a bunch of videos, getting conflicting information, and you're just confused. You don't know where to start from. I can definitely get you out of the analysis paralysis, as I've done for so many people, and help you close on that your first or your next rental property. Again, you can find the link to my calendar in the description below, and I can't wait to help you crush that your real estate goal. Before you go, I want you to watch this video of Sarah and Marcus on how they went from $0 in monthly passive income to $39,000 per year in passive income, and they did this just under 4 years. This is what I call the building wealth through the slow strategy. This is exactly what I've discussed here for you. So Marcus and Sarah, their story will inspire you. You can watch the video here. Thank you so much, and I will see you in the video. Peace.